was when I ruled the world.
So good morning, everybody. I found your presentation from the Singularity brand very interesting. And I'll try to dig a bit deeper. Clearly, looking beyond the horizon of what technology can do is very relevant and very important. I'll try to go through a lot of information very quickly. Let's not focus on the details, but I'm happy to share the information later on offline. But what I'd like to do with you today is try to distill the messages on how to identify those priorities and how to select those applications. Clearly, there is no answer, but maybe there is a bit of food for thought on the method and the process. Let's start from the context. We are in a very volatile context. This chart shows the global sector of the economy on a quite complex chart that has unpredictability of each sector on the vertical axis. If you are in the upper part, it means that normally your forecast, your expectation are more than 60% off. We use EPS as a way to measure that, so investors are proved to be wrong if you are in the upper part. And positional volatility means a simple concept. The ranking in each sector changes very fast. If you're on the right part, it means that every year you change more than twice. If you're number 1, next year you're number 3. If you're number 5 and you're growing, next year you will be number 2. As we can see, 40% of the GDP of a big market like the North American market lies in the upper right quadrant, so a very volatile environment. And we can find sectors like oil and gas, like healthcare providers, even stable and normal sectors up there. If we take an example of the media industry, that is indeed a very volatile market, and we take a chart that shows the ranking, the positioning we were saying before, of all the players in that specific industry, and we put them on the line. If the line is flat, it means that that player remains with the same ranking within an industry. Leader, follower, flat line means I'm not moving. A line that goes up and down means that I'm either gaining a lot of ground or losing a lot of ground very fast. As you can see, in the last 3-4 decades, there's been an impressive, by an order of magnitude, 10x, increase in the level of volatility. What does it mean? It means that facing the choice that I think you all have, which means where do I select to invest, where do I select to put my bet, among a list of possible options, possible application. We were seeing before, I think 7 or 8 different possible applications, which are very similar to these themes: mobility, productivity of the work environment, education. Some of them are more mature, some of them are more on a frontier. But the question is, how do I make that informed decision on where I could try to optimize my probability? A recommended approach could lie around 4 lenses. One is megatrends. Megatrends are trends that shape the evolution of society. Probably one good recommendation is, if I'm trying to innovate, I should try to follow the megatrends and at least not swim against the megatrends. We will see the problem that could arise if you don't see a megatrend coming against you. The second one is learn from the success of most innovative organizations. And I would add, learn also from the failures of the less successful organization. As we can see, in a volatile world, the opportunity is big, even if the world is not growing, but there could be significant changes in position, and I could gain a lot of ground, even if I'm in a relatively stable environment. Clearly, ride the wave of investment flow. You need to be in a sector where there is some appetite for investment, and that's quite natural. And finally, anticipate the larger transformation. Try to understand where those transformations, for example, the ones we were seeing before, disruptive transformation coming from technology, could have an impact. So let's start from the first one. These are some examples, very famous example of companies that were successful in anticipating a mega trend, and an example of companies that were unsuccessful. Technology is not always a main driver, but is not always the driver. The failure of many airlines has nothing to do with technology, has to do with the lack of ability to understand that the scale needed, the volume and the scale needed to sustain a hub and spoke system where you have, a big connecting airport, is of a certain size. And if you have point-to-point, low cost that erode that, and particularly if you are in a smaller market, at one point in time, your scale is not sufficient enough to sustain that investment. This is clearly something that when failures like the ones of Swissair happened, could have been seen because there was a mega trend going into that direction already. Let's remember that the first low-cost model, Southwest, is much, much older than that. So these are there's a long list of mega trends that can be observed. Some of them have to do with demographic, for example, aging population in Western countries, in the Western world, consumer trends that have to do with lifestyle, for example, time compression and multitasking. Some of the trends have to do with the economic world, onshoring, offshoring, and outsourcing. Some of the trends are clearly technology-related trends, and I think we learned a lot a few minutes ago. Let's see some example. A constant rise and a constant search for more productivity in the work environment is a trend that is not slowing down. If we see the overall productivity of labor, it continues to grow at constant rates, and we would have expected to see some sort of slowdown after the decade where technology has been impacting the most. But in the Western world, this is the example of the US, but even in Western Europe, unfortunately in Italy it's not so much the case, but in most of the Western world it continues to grow. Just like outsourcing and offshoring, clearly in a very selected way, but selected sectors and selected activities continue to be outsourced by large organizations globally with constant growth rate. Trading up and trading down. Consumers are very volatile in their behaviors, in that for every category of purchase, toys, cars, apparel, luxury goods, consumer electronics, we see an increasing trend of consumers, the green part, that say, I would like to spend more for this category, and I would look for higher quality, higher value, brand positioning. In general, they want to have more from that category. And a growing number of consumers want to have less, or are willing to have less, but want to pay less. If we see the number of consumers, the yellow part, that is happy with the amount of spend that is done now, and more or less the quality that is delivered now, this number is much, much smaller than the size of the category. And many players, many big industry players are squeezed because they found themselves there, and they're not able of satisfying the needs of the green part and the blue part. Sustainability. Sustainability has some mature behaviors. For example, in alternative energy. Alternative energy is big, there's a lot of investment going into it. It's not disruptive in this moment in time. It's growing at constant growth rates. But if we see other signs of responsibility and sustainability, like the socially responsible investment market, we see that the asset under management that some sort of investors that are sensitive to this are putting into this kind of investment is growing with the growth rates that are amazing and impressive throughout the world, 20% plus. And clearly, sustainability could mean different things in different markets. So, for example, the issue of inequality, the issue of the social issues arising in the Western world are things that are impacting the behavior of large organizations globally, even in North America, even in Western Europe. Time compression and multitasking. Consumers use technology and use what's offered out there to change their behaviors. So let's take video. Video is not in the video market, is not a market that is shrinking. As a matter of fact, it's growing overall. But we have linear video, that is, the old TV. Somebody creates a list of programming, you sit there and you watch it. And then there is non-linear video, which means I just use whatever I want through on demand, through whatever is offered out there whenever I want it. If we see the non-linear part, we already employ something like 1 to 2 hours of our day to do this. Let's think about the jobs, tying back to the discussion we had before. The jobs around people that do, for a living, putting one program after another. That's a job. 20 years ago, 30 years ago, TV stations were doing this. Were packaging content so that it would be at the right time in front of you with the right content. In linear video, this is not, that has no meaning because you just pick your own programs. And ready-made meals, even if we have slow food and things like that, is a market that continues to grow. Time compression across the globe, changing the habits of consumer and multitasking is happening and is real. Dual speed world. If we take consumers from the largest BRIC countries, largest emerging economies, we see that their behavior is different. When we ask them, what would you like to do to relax or to feel good, they say things that probably we don't have in the Western world in the top 5 things: spend time with my family, hobbies, spending time with friends, going out, seeking distraction out of home. These things rank much higher in certain geographies that had a different evolution path, and we need to account for this if we are interested in these markets. Health and wellness. Many of you might have read the interview of Bill Gates a few days ago that said the world doesn't need more computers, the world needs more vaccines and health treatments. We might agree, we may not agree, but the point that the health and well-being theme is becoming hotter and hotter in emerging economies because larger amount of people are seeking affordable health treatments that they don't have access to right now, while in the Western world we have things like obesity and lifestyle and food that is not really going where we would like to be, and so consumers are increasingly showing need to address those things. So these are mega trends. Let's see how innovative or less innovative organizations address these mega trends. First of all, let's see how large organizations are successful in the market. That's a good indication. If you're innovative and you do good innovation, you normally are successful. If we see the, let me say, the immediate performance, TSR, the total shareholder return of a set of sector, and if we see how this performance evolved in the last couple of years, we see some players up there that are doing well and have been doing well on a constant basis. And if we look out there, we don't find only high technology companies. We would think, okay, if we are in a period of innovation, more traditional sectors are not going to be there, while we find beverages, we find chemicals, we find the car industry. So being high tech doesn't necessarily mean that you're going to be successful. But clearly innovation is important in any sector. Now, we have been asking our clients, we work with large corporations globally, we've been asking which we could call the business community, senior managers of large organizations across sectors. We've been interviewing for the last few years many of them, a few hundreds of them, asking across sector, asking them, where do you see innovation? Who do you think is the most innovative? And where do you see the success factors? And this question was around which sectors and which companies do you see as the most innovative ones? And the first surprise is that, yeah, technology is taking 1/3 of the top 50 spots. But then there are other industries that surprised us a lot, like automotive and consumer and retail. These industries are perceived by themselves. It's not necessarily the right reading, but are perceived themselves as being very innovative. And innovation, once again, doesn't necessarily mean introducing disruptive technology. Might mean introducing new ways of seeing your core competencies and your asset. So if your asset is, I am very good at making affordable plastic pens and distributing them to consumers worldwide, maybe a source of innovation is, why don't I make other affordable plastic objects that I can distribute to consumers worldwide, and I can do that equally successfully. And clearly, innovation can have very different flavors. However, the same audience, when is asked about the innovation that is done internally within their own organization, basically the question is, how good are you at at your innovation processes, normally says, I'm average, or sometimes I'm weak. And only few of them see themselves as being strong performers. This is interesting because they recognize the importance of innovation, but they're normally very poor in implementing it. I think this is important because you remember when we saw a big pie with very big fluctuation, and this audience is probably looking at these markets and trying to jump into these markets. Who is there and who is established has a lot of fear, but appears to consider himself or herself quite poorly performing. And in fact, when we ask them, but who do you see, which individual companies do you see as being really the top performer, they rank companies that are much further away from the Toyotas and the Coca-Colas of the world. Then we also ask them, what is the main driver, the main differentiator, what is the main relevant thing when you think about innovation? And these dark green lines show the response of the strongest innovators, the companies that are perceived as best performers. And the light green axis shows the response of the weakest performers. And if we see the biggest difference between best performers and poor performers is developing new to the world products. So they recognize that innovating and bringing to the market something that is new to the world is really the key differentiator. And then we also ask them, what do you consider the source of this innovation? Where do you find these ideas? Where do you find the input? And it might be quite trivial and quite intuitive, but the biggest difference between good performers and bad performers is on employee is around leveraging employee through all the tools, the forums, the creative ways of managing knowledge and customers. So clearly, larger organization can provide some input by simply observing them. There is a third lens which is quite easy to access. For example, we could look at the VC money put into innovation every year, and we were seeing, I think this morning, something like 20 billion across the various stages. If we see the breakdown of this innovation money, most of it sits around technology, computer, internet service, computer hardware. We also have a significant amount of money on themes that are mature, already quite mature, biotechnology, medical and health. And we have other things that we saw in the first chart that are still hidden out there. We still don't see them. We still don't see the money out there. If we break down the whole technology area into the different applications that go into computer investment and computer software and internet services, we see that some of the themes are quite established, like productivity and efficiency, business and office productivity, e-commerce, online retailing, another theme that is quite stable. But we start seeing things that, and once again, we were saying medical and health is an area that is quite stable and quite mature. But we start seeing things like education, most of all security. These are things that we still don't see in the big numbers, but we see, if we look at the acceleration rate, we start seeing very significant numbers there. But most important of all, where do we expect to see a transformation in these sectors? Because a sector could be big, but as we said before, I very much agree. If it's evolutionary, it's very, very difficult to get in successfully with good results. And I selected some examples. There could be many examples, but our recommendation is take the sector you're interested in and try to understand if you see a similar transformation going on. Education. Education is being transformed. If we look at the online digital education market globally, already now it's a market that is in the range of 50 billion euro. Here you can see $50 billion, sorry. Here you can see it split about segment, primary education, higher education in universities, corporate. We are expecting significant growth rates, doubling in higher education and corporate, tripling in primary and secondary education. And also most important, we are seeing a shift from content to services. The most successful school and education companies right now already have a mix of content versus services that is, more than 50% towards service for teachers, for families, for employers, rather than just putting content on a digital platform, which is quite simple and it's quite trivial. Advertising. We would think of advertising as a very growing market, but a very consolidated market with huge players that are dominating. Is it really true? First of all, advertising follows the audience. If you have no audience, you have no advertising. If your digital audience grows all the way up to now 1/3 of the global audience, then your digital advertising should more or less, sooner or later, match this trend. And here you can see the comparison between audience and advertising. Audience is green, dark green, and advertising spend is light green. And the way this industry behaves is as one dark green bar goes up because you increase the audience with a new medium, sooner or later after that your advertising goes up. And if something goes down, sooner or later with some inertia, the same bar will go down. As you can see, print and radio, most traditional advertising media, most traditional media, are still higher in advertising than what they are in audience. Internet has been growing quite fast in the recent years to match the amount of audience, and mobile is still out there. So mobile didn't get there yet, but most likely will. But let's look at the ecosystem. If we think about the non-digital world, the advertising ecosystem was made by a few big players that were doing everything from the creative part all the way to the audience measurement and reporting activity along the value chain. Now, if we look at who's growing here and who's giving birth to new investment and new services here, it is true that many of these companies, after a few years, might end up in a larger player through acquisition, but it is also true that we find an impressive amount of innovation, for example, in measurement of KPIs for this particular value chain that is very different from the non-digital value chain, or aggregation of audience, etc. Gaming. The same thing applies to gaming. I apologize for these very complex slides, but the point is not really understanding every single number, but understanding the complexity of an ecosystem. An ecosystem that is made by distribution of gaming, that is made by content, physically producing the games and the content and the creative part, and then the infrastructure that is supporting them. And clearly there are some players on some part of the market that still play in an integrated way. The world of consoles, players that sell the console and then sell the game and everything that goes with it. But increasingly in the mobile world and in the online world, there is an increasing specialization. So you could have somebody focusing on a specific type of game, which could be social game or casual game, or it could be the multiplayer, massive online type of game where you play, with people around the world without knowing who they are. Or you could play on the distribution. So you could be somebody that distributes apps or distribute games, and you could limit yourself to that. So clearly another ecosystem where you have big players like the Electronic Arts of the world or the big console players, but you also have a large number of small innovative ventures that are born every day. E-commerce, the e-commerce concept. E-commerce is quite mature, right? You have a product, you store it, you distribute it, possibly with a better economics than the physical world. The consumer is happy, and there should be not much beyond this. But let's see at the type of innovation that we are still observing. Many of you might know the Prime feature of Amazon. Amazon basically distributes for free to Prime customers. Prime customers are loyal, receive a bigger caring, receive dedicated offers. Clearly, if we look on the left-hand side of the slide at the gross margin of the delivery through Prime, a high percentage, higher than 40%, is with negative gross margin. Why? Because we need to spend money to deliver to that customer that product. And we know that particularly in many areas of the world, like in Italy, where we don't have large scale for delivery, it's expensive. So why do they do it? They do it because, and this is a proprietary BCG estimate that we did through consumers, but we believe that they make much more money on those accounts. So if we don't look at the shipment, at the individual purchase, but we look at the customer that is tied up with this kind of relationship, if we take the following years after Prime launch, we see that the gross margin per customer is increasing in a substantial way. So in a way, this is shifting from I successfully sell one product to I successfully manage the retail distribution relationship with a specific family, a consumer, etc. Transformation of security. We spoke this morning about security. We see this security sector as really a frontier sector. Security could mean I have, all the nice technology that recognize the crowd, and I could really apply algorithms and technology to ensure data security, for example. But then we have issues that have to do with data protection and privacy. And more and more, we believe that a competitive advantage in managing big data sets will be not necessarily in the ability to manage the information from the hardware and software point of view, but the ability to convince consumers that we are a trusted source. So those companies that will convince consumers that data in their hand is safe will have a competitive advantage versus companies that maybe don't have this type of information. Let's think about, just to make an example, two players that could decide to play in this market: a high-tech startup or a postal operator in your country. Postal operators are normally perceived as, not really innovative companies in most markets, but they are safe because you go there to bring, old people go there to bring their savings because maybe they don't trust banks. Let's think about how you can be competitive on one front or the other front. And then the transformation of productivity. Productivity is already a mainstream theme if we talk about productivity of the flow of information, cloud application for collaboration, data storage, communication within the work environment is already big. But if we look at the optimization of assets, then maybe it's a new frontier. Some of you might be using the application Uber, which is was recently introduced also in Italy. There is nothing more than a solution to optimize assets. Physical assets are taxi, cars, or cars for public service around our cities. And this is a way to optimize their utilization rate. And then, tomorrow maybe, as we were saying before, the automation of the virtualization of manufacturing. In summary, closing, there are a lot of options in front of you. I think there's probably a different appetite for many different investors. You could decide to be more on a frontier on a frontier theme like security, education, or be on a more maturing sector like mobility, emerging market, trading up and down, or themes that could be more evergreen. We decided to call them, so they're still on top of the wave. But I fully agree with what we said before. Recommendation is always to look and try beyond the horizon, because not necessarily what you see is what you will see a little while from now. Thank you very much.